So when you step on this, it'll zoom into you.
And the camera's this way, right?
And the camera over there. So, and if we are not on it, it'll
pan out. Okay, we'll figure it out.
you should. Yeah, it should come out. And then this right here will show you how to do it. Like if you need to move it, but
It'll be okay. It's an hour and a half.
cool. We're just gonna stand.
There's Janine. Janine, can you hear me? I can't hear you.
Oh, hello. Oh my gosh, this is so fancy.
Okay. I don't care.
We're working out the kinks real quick, so give us a moment.
Hi, Rebecca. It's good to see you. How
are you?
I'm good. I'm good. We're just, this is the first time that we have set up at the School of Business and done a hybrid event.
Can you hear me, Janine?
Yes, I can hear you,
Yes,
Danielle.
you can hear me. Yeah.
Cool.
This is, I feel like we live in the future.
You
Yeah, this is it. It's right now.
do.
Urban college campuses are where it's at, I think.
Right.
Yeah. Yeah. Are you in a houseboat? Do I remember that you live in a houseboat? Or did I
Yeah.
just like that?
No, yeah. Well, there's water back there. You can't really see it, but
All right, can you guys hear us?
Yeah, it's very cute where you are.
That's a terrible speaker.
All right, we're good. We're doing
good
good.
enough. We're good enough. If they can hear me, I'll find a way to hear them.
Y'all can hear us loud and clear?
Good enough? Janine, is it
Yeah.
loud enough?
Yes.
Okay. And then if we just have to figure out how to get volume over there, but I bet it's down
What
here.
do you mean?
Well, I mean, that's not very loud if they're gonna talk to people.
Oh, I can change that. Volume's over here.
Okay.
Okay.
All right, can you say something now?
I'm testing the sound. Can you hear me?
Yeah. What's better speaker than that? It'll be what it is.
Yeah, I would say
Around this.
Hello?
hello?
Everything sound good?
Yes.
Can you hear me?
Okay. So will we be able to screen share then or no? Janine, are you able to see what's on the screen if I?
Yes, I can see the projector.
It could be better. We're gonna work on that. Well, you know what, we're just gonna walk through it. We're gonna be okay. There was a time when they didn't even have. Camera? Audience camera, audience screen.
So it's gonna turn the view different.
It won't be this one?
No, it will turn the view different.
You don't think that will work?
We can try it. It's gonna change the view.
There you go. Does that work? That's a little better.
Yeah.
That's all.
Is it backwards?
No.
Well, it looks backwards to me, but okay.
Is good?
It's not backwards. Okay, all right. You rock.
Thank you.
We'll get you a cup of coffee or something.
Whew. All right, everything looks good, we're good?
I think we're fine.
Okay,
Thank you.
Absolutely.
Okay, and if you see any strangers walking around and they're lost, they're probably trying to get here.
I'll be looking and I'm gonna listen in too, so.
Oh, you're more than welcome. Okay, how do we admit all? We don't have anybody waiting? Okay, hi, everybody. I'm Danielle Morris, and I am pleased to experiment here. I don't know why we're back at Oregon private business, but okay. What happened? Okay, so we're learning.
No, it's not me.
Oh, we're gonna have to switch that every time? Oh, that's nuts. Picture to picture in, on? Janine, we're gonna have to have a bigger lesson than this, and Danielle missed it. So we're just gonna have to live with it. Everybody can, know that there's a copy of the slide deck, and we're just gonna have to live with it. Okay? Does that work? Please say yes. There's nobody in the, well, we have our guest, but there's no energy. I'm the only one. So, hi, everyone. Works. Okay, good. Okay, well, tonight's session is essentially kind of an intro to accounting and a little bookkeeping and a little bit, I'm gonna start a business. And I'm going to, they don't see me, do they? I have.
Do you wanna go stand over there?
Well, why don't I just stand here? Do they lose the screen then?
No, they can see the screen, I believe.
No, this is what they would see. This is nuts. Okay. You know what, we're just gonna, they don't need to see me. Okay?
Okay.
They don't need to see me. Okay, here's chat. So, Janine, I don't know if you have powers to let people in, but, we will invite everybody, and we will, as far as I'm concerned, we can be unmuted because this is a class for you and not so much for me. Okay, so tonight's session is called Success Leaves Clues. Next week, Christine is going to be teaching and having a discussion regarding finances and financials. And then in 2 weeks from tonight, I will return and we will talk about pricing and how to price your business. This is a session for you, and I'm a very open person when it comes to interruptions. I will do my best to see that the chat session is up. Show chat. So I will work on that, and this is a Windows machine, so I'm going to fail at a few things, but we're going to be okay. So tonight's sessions is regarding, Success Leaves 2. We're going to get back here. And it's also known as why my debits just never seem to equal my credits. And that's from an old joke because this is the debits are always on the left and credits are by the right. Or if you took it in another class, if you took accounting and the professor said, oh, the debits are by the door and the credits are by the window. The truth of the matter is, it's just names and numbers, and we're gonna do okay. Let's see if we can figure this. So, we have an agenda. And the agenda is essentially, will this ever end? I think we have a 90-minute time slot. So we're gonna target to do that. If I told you we've never practiced this, just live with that. But the topic I understand very well. I grew up in Portland. I was born in Portland. I lived in the Bay Area for about 25 years. I run a boutique accountancy company that does mostly international tax and consulting, and I try to help people sleep at night. So that's really what I do. So tonight we're going to talk about, we're going to have a discussion like you're just going to come into the business world. You don't know anything. You're effectively as innocent as that newborn child. And so let's teach you good habits over bad habits, right? If you're already in business, maybe you'll make some changes or maybe you'll have some improvements, or if you have some ideas, again, we love interaction. Interaction is the most important thing. So the subtopics will be record keeping. What is it? Why do I care? How come I have to have it? How do I know if it's right? What is it that makes record keeping both so important and candidly so little done, right? We're lazy. It's painful. Unless you love bookkeeping and like you're an engineer or something and you want everything to be, really perfect, most of us don't want to do it. We want to use our debit cards and we want to use our credit cards, and tax time comes around, or the bank wants you want a bank loan and the bank asks you a bunch of questions, and guess what? Now we have to have record keeping. So the good people study success, where success leaves clues really is a topic that says, let's start it out right. And let's record those things that are really important to help you run your business, to handle your obligations that relates to taxing authorities, right? And to have an idea, so someday you might want to sell it or invite investors in or have partners. They're going to want to know that you've had financials, right? So that you can have an enjoyable time. The second section, we're going to talk about terminology and wordsmithing and why do we have to use those crazy words if accountants have a tendency to use jargon. And most people who are in business and entrepreneurs are not jargon heads. They don't know our language and therefore they don't communicate well. We ask things in specific language, you don't understand it, and that's a real challenge. So we're going to talk about some of those crazy words and just get a flavor for it. I've sent to Janine and ORPIB a copy of the PDF of this PowerPoint deck. You may print it, you may do anything you want with it, you can put it on screen, you can ask me questions. Essentially, I'm here to help you be successful. That's what I want to do. So once you figured out that you have to have record keeping and we have some words, you decided you want to open a business. Well, awesome. I've had the privilege of opening many businesses and shuttering a few too. So we want to have a business, and that'll be a conversation about the kinds of things that I might want to think about when I'm going to form a business and whether or not I need to be formal or informal. Those are just choices. And remember, this is only money. Where no one's going to jail here, nobody dies if you choose the wrong kind of an entity. This isn't life or death. This is just your checkbook and money and profits and taxes and hopefully enjoyment, because those are some of the things that are really important. So once we're having our business and we know what we're going to do and we understand the words, wow, I read or I get in social media, all these crazy ideas. Can I deduct that? Can I deduct my doggy daycare? And those are always questions that people come up with. Can I deduct veterinarian bills? I want to be in horse racing. That's really a job. It's not a hobby. Or I don't want to be a professional photographer. I never make any money, but I buy fancy camera equipment. All of those kinds of things are fine. And by the way, I'm going to unmute. Can I unmute? I don't think I've muted anybody. So if you have questions, type in, because again, this is really for you. The next section is going to work on what income. What is it? And what about those fancy words like under the table? Let me do a side job. Oh, If I pay you in cash, will you take a discount? Those kinds of conversations. Because we're not going to teach you today on how to be a cheat. That would be a bad thing. Okay? Now, that doesn't mean that people don't cheat. We've all heard of it, but we can have that conversation. There are crazy tax schemes. These are the things that people do when they owe a lot of money and they go, oh, I don't want to pay that much money. And they come and they whine and they complain and they beg for some fancy thing. So these are the ones that'll get in trouble with the Internal Revenue Service. And then finally, what if you get audited? I mean, you know, we're a voluntary system. If you get audited, nobody wants an IRS notice, or an Oregon Department of Revenue notice, or a Washington Department of Revenue notice. They happen, and so what do we have to do about that? That's our overall topic. There is, of course, the obligatory question and answer slide. There's contact information. You can write me, you can call me. On the last slide, I have it all. I'm perfectly good with it. So, record keeping. It's been around since the Stone Age. And here's a picture on the upper right hand corner. You know, back in the time when they only had bricks and mortar and rocks and pebbles, this is one of the ways that they used to record keep. Economic transactions between consenting adults has been going on for a long time. Longer than tax cheating, okay, longer than prostitution. Economics have been happening. People were trading and they were moving from agrarian barter systems to goods and services, whether that came from, you know, the Far East and the Silk Road, or the spices from Ceylon, or if it came from, you know, great rocks or beautiful golds. People were trading and they had things of value. And the modern version of all this is in the blockchain. That's what accounting is. I mean, one of the neatest things about Bitcoin and cryptocurrencies is that it's really just a big accounting general ledger. It always has to be in balance. So we can have a record keeping from any kind of a system that just makes you happy, because that's the real key. So why does it matter? Record keeping done properly provides the support and evidence necessary to ascertain your financial health. In accountants' terms, that's your balance sheet, and your financial velocity. That's how fast you're going through the system or through your money, right? So that's really your income statement. So I'm going to stop there for a second because I'm starting to use those terms and I haven't really defined them yet. The balance sheet is a snapshot. It's just a picture on any given day of effectively assets. Those are things that you own, less the obligations that you owe. Those are called liabilities. And the difference between the two of them is your equity. If you're not in business, think of it this way. Count up all of your cash in your accounts, your bank accounts, your investment accounts, your 401k accounts, grandma's inheritance, all of those. Those are things that you own and you can spend. You may have a car, you may have a house, all of those things. And you total those up, those are all your assets. And then you look at your liability side and you say, oh, who do I owe money to? Well, I owe money to Uncle Fred, and I owe the Bank of America money, and I've got a student loan, and I have a car loan, and those total up to a different number. And the difference between what I own and the difference with what I owe, that's really my equity. So in the balance sheet's a picture of my health. Today's picture is different than tomorrow. The income statement essentially is the calculus of my earnings and profits over time. So one of the things I think you'll find, entrepreneurs move in their income statement. Look at their income statement and they think highly of their income statement. Okay? And then what happens? Then what happens is, but the accountant tends to look at the balance sheet. There's always this disconnect, because you can get to a position where you're making money, but you have no cash. And that's a whole challenge, and we can talk about that later. So record keeping done properly will help you ascertain and understand where you are in your financial health and wellness. It's essentially It's your snapshot, both of the velocity, how fast we're moving through our economic sphere, and the cumulative health of our business. With good record keeping and an understanding of financial statements and the ability to think about where we're at, you have information. We know that better information leads to knowledge that supports superior decision making. For example, assume you are a manufacturer and you want to make t-shirts. And you know that you have to buy t-shirts and you have to have screen printing materials, but you're going to need a press. And you might be able to buy a used press at a certain speed and production and repair, or you can buy a new press that has warranties. So with good information, you can make a decision if you can afford the better press, or candidly, today we're gonna buy the lesser expensive press. So it's just choices, right? So at the end of the day, that's where that is. So, and if you don't have excellent information, and frequently we don't, well, we're gonna be guessing. And you know, profit guessing leads to bankruptcy. It leads to bad decisions. It leads to making, you know, where all of a sudden you're working every day to pay somebody else and you're not enjoying your family, your loved ones, or your pets, or your children. You're not getting to go to the beach and beachcomb, and you're not getting to go to the mountain skiing because you're back at the proverbial office with a company and you were slaving away, largely because you just didn't know what you should have done. So the things about record keeping, that really matters. So, yes. So let's not be confused by language, right? So business and accountants, economics, all use the accounting terminology. That's what we do. So you want to sit back and you want to think about, understand these crazy words. So let's talk about the most important words in accounting, and that's debits and credits, right? So debits effectively mean on the left. It also means debit, for the most part, generally means it's an increase in an asset, or it is a reduction to your retained earnings. We'll talk about those clues in a second. So, and the credit just is the opposite side of the debits. If you've ever looked at your bank statement and you compared that to your bookkeeping or accounting class, you'll notice that the bank's credit is your debit, because you're reading the bank's financial statement, not your financial statement. So the term originated in the 1490s at the height of the Venetian merchant traders. I only say that because these words haven't changed in over 500 years. It was first published in a math book by Father Piccoli, and just side note, he was a very smart mathematician, and he taught a young student named Leonardo da Vinci a lot of math. So these go back, and what happened was the Venetian traders were merchants, and they were selling merchandise throughout Europe, around the world. They were bringing things in from the Far East. They were going to expand into the New World, and they needed to have a methodology to figure out what it was that somebody owed them, and they had to be in balance. And so that's where Father Piccoli came up with this debits and credits in the balance sheet, so that if I sell to you, I can make a recording, you buy from me, you can make a recording, and our two recordings should mirror each other and be essentially the opposites. So if I have an increase to cash, you have a decrease to cash. So that's the debits and credit world. Okay, again, debits are on the left, credits are on the right. It's just because. If he'd have done it the other way in 1490, we would have said credits are on the left and debits are on the right. It's just what it is. It really doesn't matter. And I think that's the real key here. So then we should look at this accounting equation. And I'm going to have a few slides on this accounting equation, because it's really important if you're going to be in the business world. never have it on a test, but you need to internalize in your own words and your own feelings and your own language what it means for your health of your business. And that is highlighted here under assets equal liabilities plus owner's equity. So assets are always on the top of the balance sheet. Those are the things that we own, and that either means it's cash, something that will turn into cash, or something that I spend on like a big piece of machinery that we call plant, property, and equipment. It would be a fixed asset, and the fixed asset will help drive cash in the future because I will use it over time. Those are assets. My liabilities are anything that I owe anybody. They could include things like accounts payable for buying my products and my raw materials. It could include labor in the form of wages. It could include credit cards because I didn't spend my bank cash. I used my credit line for that. It could include term loans. It could include anything that's an obligation that my business owes to somebody else for me. I can loan my own business money. So that's what liabilities are. And owner's equity is effectively the delta between assets and liabilities. So if we just use algebra, if you remember, move something from the opposite side of the equal sign, go back to 5th or 6th or 7th grade, all those simple things, it's just math. And so if I have assets and I minus my liabilities, I end up with my owner's equity. So, and you can turn it the other way, owner's equity equals my assets. And if I take my owner's equity and I add my assets, which one is a positive sign and a negative sign, it'll equal my liabilities. But these language words are really important so that you understand when people are talking to you, you owe an obligation, you have the money, and the delta is yours to spend in essence. And that's really your owner's equity. Thank you, Frank, I'm catching up questions. Would liabilities also include uncashed checks? Checks that you've written that are uncleared, yes, those are called outstanding checks. Now, what normally you do, if it's normally uncleared for a month or two, and thank you for reconciling your bank account, that's the first start to something that's really smart. You take your bank statement balance and you subtract those outstanding checks, hence you're reducing your assets. So yes, uncashed checks are really liabilities. They're money that isn't out of your bank account, but yet you owe it. Okay, look at that, I got a thumbs up, this is working. Okay, don't see a question, just keep pounding away, it's all figured out. And I think if you unmute yourself, I'll hear you in the speaker, so it's okay. Not my first time teaching or lecturing at Portland State, but not my first time doing this. Okay, so let's show a simple equation. I hope you can see this. We're gonna run a coffee shop. This is like story problems in Algebra 1 and Algebra 2. We're gonna run a coffee shop, but we don't maintain any inventory. So when you show up to buy my cup of coffee, I run down and I get the beans and I get a cup, because I don't want to deal with inventory at the moment. So the customer buys my coffee for $3. That clearly indicates that I'm not in the normal places that are selling coffee today. So the first thing I do is I record my sale. I receive the cash, $3, hence the debit in the bank account. And I have to create a sale. Now, did I not do that right? I didn't. Well, that's an incomplete slide and I'm an idiot, so I apologize. But we have an Excel example. So the first thing that happens, see this or not, but here at the top, we have the sale of coffee. That's an income item. That's something that is going to generate great things, okay? So that's a credit, because remember, that's really increasing my equity because I just made sales. And I got cash in the bank for $3. And you'll notice those two numbers balance. And when people do simple examples for sessions like this, we never do anything with pennies, we're only in the dollars. And over on the asset side, we have $3, that's the money that went in the bank account. And we have an income item of $3 for sales, and we're still balancing. You'll notice that those are in two different columns. And I wrote a journal entry that said I'm gonna record the sale of coffee. That's to remind me 3 months from now, why did I get the $3? Because if I always write it out this way, never forget it. I have written, I don't know, far in excess of 10,000 journal entries in my life, some of them incorrectly and backwards. But that's how we practice. It's kind of like driving a car. Don't always miss the pothole. So the next thing that had to happen is I had to record that I ran out, I bought my cost of sales, you know, the cups and the coffee beans, and let's assume I paid $1. So now I'm gonna record my next journal entry, or you're gonna use your software system to do this, but the point is, I spent $1, what we call cost of sales, and I spent $1 out of my bank account. The customer gave me 3, I spent 1. So over on my asset side, I have income of -1 because it's a cost, and I have an asset of a -1. So at the end of this transaction, I recognized a total of $4 in debits and credits, and I balance, which is a really important thing. And over on my asset side, I have $2 in cash, and I have $2 in net profits, and I balance again. And it's very simple. So that's what we mean by having good record keeping. I'm not gonna be on screen, right? Did we figure that out? I'm not gonna be shown. I was just gonna sit. We're gonna have this down in the next session or two, but we'll be okay. All right, so, if you have any questions, but that's kind of the very basics of an accounting entry. I mean, we take in the semester system, we would cover most of these topics in 12 or 16 weeks, so we're only going to have, you have 90 minutes, and I've already wasted 30 minutes of your day. So in the sample equation, the service company, again, I'm repeating, we recorded the sale, so we increased our cash by debiting it. We recorded the sale, and then we recorded our cost. And this is that Excel spreadsheet in Word. So when you look at the issue, you will be able to look that up. So let's revisit our accounting equation. Now, we talked about that assets will always equal liabilities plus owner's equity. And I even put a picture there for you. So what's owner's equity though? That gets people really confused. So owner's equity, that mathematical delta, is really all of your prior annual profits. We call those retained earnings. And minus your distributions, think that you took money home because you made profits, plus the capital contributed, those are the times that the company didn't have enough money and you had to feed it, okay? So those are all your historical annual profits, and the accumulation of all of those equals what we refer to as retained earnings. And so that's really what we call retained, because you haven't spent them yet. And then we have a component called your current year earnings, or your current periodic profits. That's the income statement. And that is what the entrepreneur has a tendency to really look at and enjoy. So your total's owner's equity is all of your prior equity plus the current period equity. So that the accumulation of those two numbers should equal the net delta difference between the total assets that you have, and of course, the total liabilities. I'm hoping that makes, I mean, we're doing this a little bit fast, but hopefully it's coming up clear. So Now we have to say, wow, how should we record these? I mean, what are my choices? And the truth of the matter is, you have choices. You know, we are not some old communist country where we only have one, right? We're imperfect where we are, but you still have some choices here. So the first thing you can do when you start a business, waiting, hang on here.
With Grant?
I gotta let somebody in. Admit. Okay. All right. Okay. So, what should we do when it comes to our bookkeeping system, record keeping system? Well, we could be manual, right? We could just use a check register. Frank talked about those uncashed checks. We can record those in the thing that we get from the bank, assuming you write checks. Or you can put them on Excel, or you can use some other online app that says, here's my receipts and my spending. If you go to Square, they'll give you a report. The key is you can do it manually, and you can do it by paper, and you can run an adding machine, and you can do all those things. Most people don't today. I think it's perfectly fine if you run a simplified rental or candidly a smaller kind of business. You don't need fancy software. You don't need subscription services at $30, $40, $50 a month today. You might tomorrow, but not today. So manual's just fine. If you've reconciled your bank account, and you've recorded all your deposits and all your sales, you just make a column for every kind of thing that makes sense to you that's described, and then we'll figure it out. We can help you do that. I'm not soliciting your business. The point being, that's what a good accountant or a bookkeeper can do. If it's logical, sure, it makes sense. Your books are yours. Don't let anybody ever tell you that anything different. They're your books and records. They're for you. If they help you run your business and make better decisions, then I'm all for it. Don't use my system, use your system. It's really important, I think, because you'll never do what it is I want you to do. It'll only be what it is that you want to do. Well, what if you don't want to do it by Excel or by handwritten? Well, there are a series of different kinds of computer software systems. QuickBooks, candidly, is probably the most popular in the country. It's written by Intuit. It has a simplified SaaS model now. They used to have desktop. They used to have a product called Quicken, but it's QuickBooks. And the nice thing about QuickBooks is, if you make a mistake, you can fix it. The other thing about QuickBooks is, you can go down the street and find 100 accountants every other block that can work with QuickBooks. It takes no programming background. It's completely easy, and it's simple. It runs on a subscription model. People in their 20s and their 30s frequently are using something called Xero. Xero is not as robust today in accounting as, say, QuickBooks, but it's really pretty good. It has a lot of online tools. It integrates very well with a lot of the credit card processing like Stripe. So it fits very well. Certainly good for a service model. It's not really an issue. If you want to move up market, right, and you're making a lot of money and you have complicated divisions and you have a complicated business and you've got a store in Vancouver or a coffee store, we have a coffee store in Vancouver, a coffee store, in Beaverton and downtown Portland and Pearl and along Mississippi. Well, we might want to go something like NetSuite, which is a software, as another SaaS model. It's produced by Oracle, and it's a lot more money. It's probably $500 to $1,000 a month. It's very robust. It handles multiple currencies. It does a lot of things. I don't sell any of these, so I don't care which one you use, but it's a sophisticated and it works quite well. There's a company called Sage. Sage has consolidated a number of accounting programs from what we call Simply Sage, Sage 50, all the way up, I think, to something called Sage 300. And it can do everything from very simple businesses, the coffee shop, to a coffee grower, importer, exporter, and coffee shops. So you could become the Voodoo Donuts using a Sage system, but probably not run a Voodoo Donuts in QuickBooks. But all of these work. I don't care if you do it in paper, on a computer, through a service, if you outsource it to a bookkeeper. It doesn't matter if it makes you and your business really, really run well. That's part of the key here. Over here. So, what's important in all of this? Well, I'm going to repeat this because I think it's important enough that it bears repeating. You need to know where you are. That's your balance sheet. That's the health of your business. If you're out of cash, but you have customers standing in line, you're in trouble because you won't be able to pay for it. You have to know where you've been. Let's call that the history. That's the calculus. That's the income statement. That tells me where I've been. It doesn't tell me anything about where I'm going. It just tells me where I've been. So the summary of sales and costs are measured between dates. And that accumulation is called your income statement. But businesses, as you get bigger, I mean, if it's your own business, you know, there's a hardware store over on about 12th and Star, maybe 14th, Southeast Star. And the proprietor is like a second or third generation Portlander. And his version of accounting is, I have more money at the end of the month than when I started, and I don't owe anybody any money. I must have made a profit. And he's absolutely correct. And as long as he does that every day or every month, he's good enough. His accountant can care about all the details. So he runs his business at this hardware store through the checking account. He pays all his bills every month and he has more money at the end, he made money. That works. But if you're not so successful, you might want to know about or pay attention to what we call key ratios. These are things that a bank will care about. Investors will care about. People that you owe money to will care about. So the first thing is cash flow. That's the periodic calculus of gross money in less gross money out. You know, it's kind of like what it is at my house, right? I get paid twice a month and I spend money every day. And hopefully at the end of the month, I have a little bit more than I started with. And that's positive cash flow. So cash flow is an extremely important aspect of the business. Probably after 5 years of business, you're going to have to need, it's just a cash flow game. I can guarantee you. Okay? The next thing is a concept called working capital. And working capital, again, all of this, you can have this on the slide deck. Working capital is the net of your current liquid assets. So those are things like cash and people who owe you money called receivables, inventory items that you purchased to sell, and what we call prepaid items. Those are things I paid this month for next month. And less, so you subtract the accumulation of your 1 year's liabilities. So those are accounts payable that you owe, accrued wages, taxes, principal amounts due on interest and loans, and that's your working capital. And you want to be positive in working capital. If you borrow a lot of money from a bank, they will have requirements for working capital. The next one is called the debt to equity ratio. And that really is about how much money you have in the business versus how much money the bank has in the business. And banks candidly want to see that they don't have, that you have at least $1 in of your money for every $2 that they have in. The closer you can get to 1-to-1, one of their dollars for every one of yours, or even lower than that, your interest rate will go down, your ability to finance will go up, your ability to sell to bigger suppliers, vendors will go up as well because your financial health will be better. So if you only knew where your balance sheet was and you looked at your cash flow, your working capital, and your debt to equity ratio, and you started to plot that over time, you'd get a picture of health of your business. So now that I've tempted you to have a business, you now want to open a business, now what? What do I think about? Well, there are a number of ways to run a business, from limited complexity to greater complexity. So the first thing is I can be a sole proprietorship. I don't need anyone's permission. I might need the county or the state's permission if I want to use an assumed business name. So if I wanted to just be Danielle Morris and I was a consultant, I wouldn't need, other than a business license, maybe from the city or the county that I'm living in, but I don't need a fictitious business name. But if I wanted to call it Honeybee Coffee, well, I'd have to go down to the county or the city and request what we call a fictitious business name. And I would say that Danielle Morris is doing business as, Honeybee Coffee. That way the world knows who's behind it. It's about a disclosure thing. Very simple. There's some limitations to it. And one of the things that happens is, in a sole proprietorship, you have no liability protection. What's that mean? It means that if I'm in my coffee shop and I somehow inadvertently have rat poison get into the coffee cup and you get sick and you sue me and I don't have enough insurance to pay for my damages to you, then my personal assets are at risk. And if it's more than I have, well, then we file bankruptcy, and that's a negative. That's a bad thing, right? But a sole proprietorship is simple. It can be a single owner, or it can be, a couple. So a married couple can be a sole proprietorship under one name. Now, if two or more people want to form a business, but they don't want to form anything fancy, by definition, that's called a partnership. And a partnership files a different kind of a tax return, like sole proprietors, unlimited liability for general partners, but you can be very flexible as it relates to profit allocations and profit shifting and capital calls. It's a very easy way to run a business. A lot of real estate businesses frequently operate in partnerships. Since about the mid-1990s, though, this has changed a lot to something called the limited liability company, or LLC. If you're a professional, an engineer, or an architect, or a medical doctor, or an accountant, somebody who's regulated, you might have to operate as an LLP, a limited liability partnership. But LLPs and LLCs are just regulatorily different. Other than that, they are the same. An LLC is a partnership that has liability protection. So like a corporation, one of the benefits of a corporation is that the shareholders can only risk the amount of money that they've invested in. They can't, generally speaking, they can't pierce the corporate veil and come have a conversation about your private assets. So a limited liability company is very sophisticated, has great opportunities. If you're going to form a limited liability company, you might choose your jurisdiction wisely. You can form your initial limited liability company in any state or jurisdiction that you desire. If you're going to form one, say in Wyoming, where they have better privacy rules, but operate in the state of Oregon, you just have to qualify your limited liability company in the state of Oregon. The Secretary of State gives you a number, and then you're legal to do business in the state of Oregon under the Wyoming rules for limited liability companies. You can have a single owner limited liability company. That's called a disregarded entity. It really makes your sole proprietorship for tax purposes with liability protection. If you don't want to have a limited liability company, but you want a corporate form, and there are benefits to corporate forms, you can form corporations. Corporations generally come in three flavors. Flavor number one is what we call the S corporation. It generally stands for small or simple. And when I first started in the practice, S corporations were limited to 25 shareholders. Today, I believe they're limited to 100 shareholders, but they have some restrictions. You can only have a single type of class of stock. So you can't have dividend right differences, and you can't have power differences. Only Naturalized people can be a shareholder of an S corporation. That's US citizens or green card holders. So people who are visiting our country, even if they are here for 30 or 40 years under some form of a visa, are ineligible. And that can trip people up because we don't always ask that question of our business partners. But all the items up through the S corporation are subject to what we call a single layer of tax. If the company makes money, the company really doesn't pay a tax. The shareholder owner pays all of the taxes. That can be a good thing if you're a cash flow business and you're not going to sell. It can have a negative if you're having to plow your business profits into new equipment and expansion. So before you make these decisions, you should, like all things, plan it out and run the math. This is because if you make an S election, you're always an S. And not, well, not always, you can undo it, but there's some challenges. A C corporation, or what I call a common corporation, I tell people think of Apple and think of IBM and Microsoft and Nike, and those are all C corporations. They can have multiple classes of shares. They can have different dividend rates. Corporation itself pays its own tax and then takes its retained earnings, that's income minus taxes, and it can pay a dividend, which unfortunately is taxed a second time to the shareholder. And that's called double taxation. So in privately held companies, if you're going to be looking for lots of distributions outside of payroll, then maybe a C corporation is not a good idea. One of the neat benefits of a C corporation, though, is if you own the right kind of a C corporation and you own it for 5 years and you sell the corporation stock in an exit, you don't pay any federal tax. So think that you created Microsoft a long, long time ago. You bought it when it was really small. You held it for 5 years. You sold it for $1 billion. You would pay no federal income tax. That same transaction in an S corporation, and you would pay for $1 billion, you would pay $238 million in tax. So the C corporation can have its benefits. It's also easier to accept venture capital, outside investors, and if you're going to expand around the world. Things to think about. There is a newer version of life, newer meaning in the last 15 or 20 years, what we call the B Corp, the B Corp. And the B Corp is really, generally speaking, a C corporation. It's a regular common corp, except for it has as part of its purpose, social redeeming value. It doesn't have to just maximize profits. What happens is that in a B Corp, companies can say, you know what, we're going to give money back to the community and the shareholders be damned. If they don't like it, don't buy my stock. That's a little bit about, if you read the shareholder letter, what was then Google, now Alphabet, that was some of the things that Sergey and Paige wrote about. They said, we're going to do experiments, and if you don't like it, buy someone else's stock. That's not endorsing any person. It's just saying it allows the freedom for the owners and the principal shareholders to do other things and maximize the profits. You can have nonprofit corporations, kind of like ORPID is a nonprofit. You can have trade associations. You can have, charitable organizations. Those are all types of specialized corporations. Nonprofit is probably a poor word. It really ought to be tax exempt, because most nonprofits actually make profits. They just don't have a tax burden associated with it. So, and then there's some very specialized government corporations as well. Not government per se, but like if you have a home loan with Fannie Mae or Freddie Mac, those are government endorsed corporations that have special attributes to them. So those are kind of the most common ones. And you can choose, and what frequently happens is people start out with sole proprietorship, and then sometime they figure out that they should be a corporation. And they choose limited liability company, or they choose the corporate model. Now, some of the things to think about early. If you're going to sell any product that can damage or harm somebody, let's say that you're going to be in the oil and gas, you're gonna have a gas station or a fueling station. Well, then you'd probably wanna be a corporation because you wanna shield yourself from that. You know, think about, there was a glass company in Southeast Portland a year or so ago that had tremendous issues as related to leads and other things that were being expelled in the pollutants, and the local community had higher than average certain toxins. Well, if the company was a sole proprietorship, those owners would be individually held liable. And in a corporate form, they would be limited. So things to think about as it relates to there. So there's a slide, I've written in words all the things I mentioned, but I want you to know that, you know, where you choose in the middle of this slide is LLCs like partnerships. If you choose to incorporate in California, you can pay between $600,000 and $12,000 for the privilege of having an LLC, whereas in Oregon, it's $150. So where you operate is important, but this essentially mirrors what I said earlier. Okay, I'm gonna do a check-in. Are we doing okay? I'm not seeing a bunch of questions, so if I haven't, just speak up. Thank you. Okay. So the next is it really deductible? Can I really let the taxpayers subsidize my lifestyle? That's really what this is about. So what we refer to this as bulls make money. Those are people who are progressing forward in life. Bears make money. Those are the people who are hibernating and think the markets are going to crash. But pigs get slaughtered. So don't be a pig. And so what's it mean? What can I deduct? Well, the theory is in the Internal Revenue Service, it says, you know, you can deduct things that are usual, necessary, reasonable, and customary or ordinary. So if let's go back to our coffee shop business. Our coffee shop business, well, we know we're gonna have cups, and we're gonna have coffee beans, baby tea, and milk, and half, and espresso beans, and machines, and all. That would be, you would expect that in every kind of a coffee shop. Maybe we sell special magnets, and we have things, those are quite normal. So none of that would be challenged. Now, what if my same coffee shop really liked music and was a budding musician, but unfortunately could never make any money as a musician? But figured out that if they brought in guitars and pianos and saxophones and all of the instruments for a band, and they build a big stage on the band, and, you know, could they then deduct all the musical instruments? Well, that doesn't mean that coffee shops don't have them, but would it be usual for a coffee shop that is open the hours that they have, or has the clientele that they have? And are people there in the evenings or the afternoons predominantly there to listen to music? So is it ordinary? Is it customary? Or is it somebody who wants to take a multi-$1,000 guitar and have the taxpayers subsidize that by deducting it? So we run into challenges, say people who want to have a private plane. They want to fly their business, but they only have one location, but you know, they're scouting new opportunities. Well, maybe once or twice you can do that, but you probably couldn't go every week in your private plane and deduct all the costs of your private plane while you're floating around the country and you're not opening up new businesses. Now, if you took that same plane and you were opening up new coffee shops in Boise and Fresno and Sacramento, this is how you as a CEO went and visited your spots, then you could probably have the private plane and deduct it. So again, the kind of business will determine whether or not that expense is really allowed. And that's one of the things that's most important. So you want to think about that those terms aren't defined. There's no place in the Internal Revenue Code that says what usual, necessary, reasonable, ordinary, or customary means. But it's like a feeling. And when we get to the audit section, the auditor is going to make a decision whether or not you were or were not in reasonableness. For example, I represent a person who, I used to represent people who are in the entertainment industry. And, you know, they were models and actors and actresses. So could they deduct their hair and their nails? Well, if it was right before a photo shoot, or right before an acting job, it was connected to it, yes. Was if it was just a weekly manicure, pedicure, or hair appointment, might be no, right? That comes to things like clothing and uniforms. So if your business attire is also eligible to be worn on the weekends and on the daytimes, and you know, it's polo shirts or something like that, not deductible. On the other hand, if you wear a uniform that says Francine or Danielle or James on it, well, then you will have what we call a uniform. So again, you can tweak this a little bit. You can buy special things, but the key here is be reasonable and be able to look that auditor in the eye and make sure that you aren't violating. So that leads us to what we call keep it clean, right? I mean, I've been doing this a long time. I've helped a lot of people who struggle. Sometimes their struggles are all on them, sometimes it's not. But one of the things that I think is important is paying tax is a sign of a healthy business. If you're never paying tax, you're gonna have a challenge. You're gonna have a challenge with banking. You may have a challenge with the Internal Revenue Service thinking you have a hobby. There's a kind of a common rule that says you need to have a profit in 2 years out of 5. That isn't in the code, but it is in a regulation and it is in the Internal Revenue Manual that if you're able to show a substantial profit in 2 or 5 years, you probably have a profit motive. You can lose money every year and still have a profit motive. If you are in the research and development of new pharmacology, you're going to spend 8 or 10 years before you ever see a dime. So again, facts and circumstances, the kind of business you are, the record keeping that you have, the kind of establishment you have, and how much personal use equipment you have, they all matter. And those are conditions. So things that people play with. And entrepreneurs are easy about this, right? They don't think anybody's gonna notice. They also think that everybody's doing it. Well, not everybody's doing it, and if you get caught, that's not a defense. So you can be paid in cash. People can bring you a satchel of cash. They can give you hundreds of thousands of dollars in cash. If they give you more than $10,000 in cash, you're to report it on what we call a banking form. It's technically called a suspicious activity report. It doesn't mean evil. It just means somebody bought cash. It means you can take it to your US bank or Bank of America or your local credit union, and you can deposit that money, and I guarantee you the bank will take one of those forms from you. I don't care. I've had many of those forms filled out on me. It's okay. We're not cheating. We don't care. But taking cash and pocketing it. I represented a person one time that ran what they call a dental lab. And a dental lab is something that they've used for years. If somebody needed a crown or a certain kind of mold, or they needed dentures, the dentist would take the impression and they would send it to the dental lab. And the dental lab would, of course, process the work. And there was a scheme that was set up between a dentist who was audited and the dental lab. And what happened is that the dental lab would get invoices for products 1 through 30, but products 30 to 40 were set on a separate invoice, paid on a separate check, payable to the owner of the business, but not the business. and the owner of the business took it to the bank and cashed it. And that was how they had their pocket cash. And that was all well and good until the dentist got audited. And the dentist was caught cheating because he was doing this with a lot. And a group in the Internal Revenue Service called the Criminal Investigation Division. And they investigated this dental lab. And when I found out where they were, we had to bring in a lawyer. But the key is, he was taking cash and pocketing it. Of course, he forgot to tell his spouse, so they had other conversations. If you're overly egregious in what we call personal use expenses, you buy a fancy car, good. Or in Portland, maybe a fancy bicycle. But the point is, you're not really going anywhere in the business, and yet you're trying to deduct everything in the business. You want to visit Hawaii and take a tax deduction, so you fly to Hawaii and you take a 1-hour seminar, but you stay a week. That's gonna get you into trouble. You can go to Hawaii for a meeting, just go to a meeting 3 or 4 hours every day, and then go spend the rest of the time with your loved ones. That's perfectly fine, but it's gotta be predominantly business. So moving your personal use items will get you into trouble. Going to Costco, buying your home food and your office supplies and having the company pay for it all will get you into trouble. There are what we call faked invoices. These are people who create dummy products or dummy vendors, and then they send out payments. When I was in university, at the University of Oregon, our professor talked about an audit she had when she was a young staff accountant. And the owner of a business under audit had created an employee called C.Ash. And she wrote all her payroll checks with first name, first initial, and last name. So Danielle would be D. Morris. So she created somebody called C.Ash. You take away the dot, she gave it to cash. She would go to the bank and she would cash the checks and take the money. Now, it wasn't a really bright scheme because she had to pay the payroll taxes affiliated with it, but she was deducting it and the IRS was gonna catch it. People want to take Bitcoin and crypto and think that nobody's gonna catch it. If you're involved in Bitcoin, crypto, digital currencies, there's a checkbox now on the tax return. You have to say whether you have wallets and you did transactions. Don't lie and cheat on this form. It'll get you into trouble. Crypto and Bitcoin are legitimate uses of economics. Just report them. That's all. FCPA and foreign payments. FCPA stands for Foreign Corrupt Practices Act. It's a felony in the United States to bribe foreign government officials. It's probably a felony to bribe US officials, but it's really big on foreign ones. And even though the rest of the world frequently lives on bribes, we don't get to do that. So there's some people get aggressive by using foreign payments or bringing in money and calling it gifts from my relatives that live overseas when it's really sales. Lots of those. One of the biggest things I think that happens with people when they get into trouble is they have what they call amnesia. Because in amnesia, it essentially says they forget the advice that they were given by the professionals and accordingly create challenges. So there are a series of crazy tax schemes, just like the government has this person on this X cross where they're tied up and asked if the taxpayers are comfy, right? So if you ever want to see this comes right off the Internal Revenue Services. But things to think about in your business and don't, there's both scams and schemes here. But the first one, which is really stalled because Congress has stopped it, but last year, probably throughout most of the year, you probably couldn't go a day if you listened to commercial radio that didn't talk about the employee retention credit. How you could get $26,000 per employee. And even if you've got, these are COVID related things, even if you got the PPP loan, you could still have it. But people were just faking the paperwork and the government was just handing out the money. Wow. So That's the number one scam. When somebody says, oh, you can get a lot of money, but you really didn't have the payroll, that's a challenge. There are a whole bunch of problems with phishing, of course. People trying to get your data and information and taking your money or claiming things. Third-party scammers will call you up and say, hey, we're with the Internal Revenue Service. You need to go get $500 in Amazon gift cards and pay us right now, or we're gonna come arrest you. And they really attack immigrants because the immigrant population doesn't know, our government doesn't accept Amazon gift cards. I have had clients who've been had their spouses at the bank ready to wire, but fortunately we stopped it. So, and I've had clients, I help run some trusts, and I had somebody take the name of a client email and they tried to request $1 million payment. But fortunately, we had controls in place. But this stuff happens, it happens all the time, and it's horrific. There's a scam out there called false fuel credits. If you run a boat, or if you have a motor boat, or you have farm equipment, or you have off-road vehicles, you pay fuel tax when you buy your fuel, but you can get a credit back if you submit the paperwork. So if you have a boat on the Willamette or the Columbia River, you might get $100 or $200 or $300 worth of tax credits. You're not going to get $10 and $20 and $30,000. If you have a wheat farm over in Sherman County, well, of course you might, but people are cheating heavily. There are what we call fake charities. Send the money to my charity, it's really not legit, it's a scam. So always check if you're gonna give money to charity. You can look them up if they're a qualified charity under the 501c3 rules. There are bad preparers. You know, every year there's a whole list. These are people who take abuse of the rules, get people bonus tax refunds and then charge a split with them. There's social media that just completely fakes this stuff up. And then they say, oh, taxes are voluntary. The Constitutional Convention wasn't correct. The 13th Amendment wasn't right. I don't really have to pay. Well, just try that a few years and you'll go to that, you can go visit that prison that's out towards the coast, right? So that's what happens. We have cyber risks. That's just the people who are going to either poach my data or your data and then create fake IDs. And then they're going to claim your refund before you get it. That's horrific. Offers and compromises. If you owe the IRS a lot of money, they will settle with you, but don't be foolish. They're not going to go below what your capacity to pay is. There are deferred installment schemes. You're going to sell something really valuable and you don't want to pay the tax. So people will come up with fake deferred installment schemes. There's abuse in what we call conservation easements. Those are things where people have, where people say, oh, I bought a piece of property for $1 million and then I have it reappraised if I give the ugly 90 acres of the back property to Mother Nature and they get a $1 million valuation for that. So they did take a deduction and they effectively didn't really give anything away of value. So those are schemes. Conservation easements are wholesome, they're good things. It's how the Nature Conservancy frequently gets great property, but abuse is abuse. Offshore accounts is another area where the IRS is really challenging. People think that if they open up an account in the Caymans or the Bahamas or the Isle of Man or the United Kingdom or wherever home was for their family before they came here, but they don't have to tell anybody. United States taxes, worldwide income, and there's an obligation to report your worldwide assets and your worldwide properties. So we're almost to the important questions and answers. I hope this has been enjoyable. It has been for me, although we're gonna have to figure out how to get the cameras to work, but we'll work on that. So being audited, also known as winning the negative lottery. You know what? It's part of life. It's okay. Assuming you haven't really done anything purposely wrong, the worst thing that's gonna happen is you're gonna write them a check. You might actually get money back. they're not really good at that, but they actually have an obligation to make the tax return right. So the real first important thing is, if you've made an error, life happens. And, okay, fix it. Tell them, you know, when I was preparing my work papers for your audit, I noticed that I forgot to include the interest on my bank account. They probably already know about it, but the point is, just fess up to it. It's not the end of the world. You know, if you deducted your children's preschool or your veterinarian bills for your dog or cat, well, you're gonna have to say, oops, I didn't know. Okay, you'll probably pay a penalty for being so creative. Life happens. You're gonna live through it. But they're gonna want your records. They won't believe you. You're gonna think that they think you're just a liar and a cheat. And to some degree, taxpayers frequently lie and cheat. So they're a little jaundiced, but they're generally really good people. They're not evil. Give them what they want, when they want it, and how they want it. But think records. If you're gonna deduct a car in your business, you have to daily note who you saw, what was the business purpose, beginning and ending mileage. That's what you're supposed to do, but nobody does that anymore. So grab an app, follow your calendar. You can prove with other ways, but the better your records are, what we call contemporaneous records, better you'll be. So think 1950 records, not 2024. They don't want to see your soft stuff. They're gonna want to see invoices, receipts, take pictures. I mean, I can appreciate that you are a construction person and you buy lumber at Home Depot. Well, you could also buy lumber for your house at Home Depot. They're going to accuse you of buying lumber for your house. And if you fail to have enough records, they can disallow all of your deductions, even if they're wrong. So better records, think receipts, scan them. Computers are cheap today. Should you go alone? Is that insane or not? If you're a simple taxpayer and you don't have anything to issue and you aren't owning your own business, you can go alone. You know, they're not gonna bite you. But on the other hand, if you've got a business and you're complex, well, you can reach out for help. There are groups of people that do this. Enrolled agents, what we call EAs. Those are people who are licensed by the Internal Revenue Service, frequently former auditors of the Internal Revenue Service. They're really good on the income statement side of life. They aren't really strong balance sheet accountants as a general rule. Think of that as a Van Gogh impressionistic painting. That is not a Polaroid photo of saying that, but it's just a general rule. Very competent people. There are CPAs, and if they have tax experience in your area, they generally communicate well. They have a deep understanding and they're respected. You can always go to an attorney. There is limited privilege in accountants and enrolled agents. There's better privilege, meaning you can tell the lawyer a little bit more than you can tell the accountant as it relates to the bad events that you did. But don't think it's pretty. You can always take what I refer to as Uncle Buck, but Uncle Buck's not gonna help you too much. So, but you can take somebody for moral support. If they assess taxes on you, and that happens, you have some choices. You can pay it. If they're right, pay it. If they're wrong, or you think that they're just a little bit aggressive and egregious and they should have given you some of what you asked for, well, you can appeal. Appeals is free. It's administrative, it's another auditor that's gonna look at it. I will tell you that an appeals officer is going to look for one question, and that's whether or not if they went to court or the tax court find in government's favor or your favor. So if the government thinks they have a weak case, they will settle with you. You can always go to tax court. It costs $60 to go to tax court. It's not expensive, but it is a public record and it is ultimately going to court. The nice thing about going to tax court is that you have the ability to go back to appeals and get another look at it. If it's simple enough, you can usually stop it there. But that's kind of what happens. Audits happen. And by the way, not just the state audits or the IRS, city of Portland and cities frequently have an auditing aspect. I sit on the city of Portland's business appeals and licensing board. We hear appeals for people as it relates to property taxes and utility taxes or franchise fees. So there's a series of audits that could be out there. If you live in the city of Portland or Multnomah County or the Metro District, you may or may not have local layers of taxes. All of that matters. So, you know, in essence, as we get to that time for Q&A, I don't have a curfew, so I can stay, I think. But I have no restrictions on topics. It's easier if you ask them out loud, so maybe everybody can hear it, or I can hear it, or you can type it or read it. Keep your personal information personal. If you need to say, I have a friend, I think friends can have lots of evil things going on while you don't. One of the things I want to promote next week, Christine is going to cover finance and others. She's, I think, been listening. I, hope that she's had a good time. And then in 2 weeks, I will return and talk about a much more fun topic, and that's pricing. And by then, we'll figure out how to run this wonderful system. And so I see this pricing is one of the most important things you can do in your business to really earn a profit, because you want to be a price maker and not a price taker. My contact information is there. At this time, whatever it is that you would like, I'm more than happy to answer questions. We're supposed to be done in about 10 minutes, but I'm good. So I will turn it over, either type it in the chat or let me know. They've been silent for a long time. We'll probably say goodbye. So I know I threw a lot at you in an hour and a half. It's complex, but this is to give you a flavor. So any questions? I can unmute. I don't know how to unmute. I think everybody's unmuted, right?
Okay,
So everybody can unmute themselves. So if there aren't any questions, I'm happy to say goodbye. Is there a question? I already answered them. Oh, here's a new message. Oh, that works. I think I've answered. Oops. Oh, hang on here. I apologize. I see this. Ben has a question. Thank you. Ben asks, I have a service business agency question about the Portland Multnomah business tax that changed starting in 23. Can I describe what it was prior and post? Wow. Send me a note on that, because I'm not going to guess it right now, even though I sit on the appeals board. I haven't sat through an appeal. I don't live in Portland. I live in Clackamas County, so I can avoid that. But, so send me a note and I will get you an answer on that then, and happy to try to post it, because I'm not going to fake it tonight. So, no, you're welcome. Did I miss a question? Let's see here. Okay, I actually have a thank you slide too. Let's go over there. I don't know how to do this. This is terrible. There you go. I have a thank you. If you have any questions, send me email. Just tell me you're in the class. I'll answer it. Okay? I'm going to say goodnight. Everybody have a great day. Come see Christine next week. And I think this was fun. This was a new experiment for Viv. And I'm sure you'll get an evaluation and say whatever you like. So we're all good. All right. Good night now. Thank you.